Hi everybody, this is Lara with your end of the week video for oil for the trading week ending Friday 27th of March. A short to mid-term target for intermediate 3 to end is at 11.92. Intermediate 4 may be a multi-day interruption to the downward trend, and when it's done then the downward trend may resume to the final target at 9.77. For the short term, a new high above the upper edge of the black channel on all the daily charts would suggest it could be possible a sustainable low may be in place, but this view absolutely requires a new high above 49.32 for confidence, and we'll get to why as we get through the Elliott Wave charts. This has long been my preferred wave count, or my most likely wave count for oil, because it has more support from classic technical analysis. This sees that the bear market for oil may be incomplete, and I'm labelling it Super Cycle Wave 2 double zigzag. The first zigzag in the double is complete here. It's labelled Cycle Wave W. It subdivides 5, 3, 5. The double is joined by a 3 in the opposite direction labelled X, and the second zigzag in the double labelled Cycle Y, subdividing 5, 3, 5. The only reason I'm considering the possibility that the bear market for oil could be over is prices found support at the lower edge of this channel. When you draw this channel on a semi-log scale on weekly charts, draw it from this all-time high back here for oil to this high here, and then place a copy down on this low. It's perfectly where prices found support and bounced up weekly this week. That doesn't mean support has to hold there. If we get a breach of the lower edge of this channel, I expect some energy may be released and we may see a further increase or a continuing strong downward momentum for oil. But right now it is finding support here. Let's take a look at the weekly chart with the end of cycle X is this point here. Now we're looking at the structure of cycle Y. 5, 3, 5 likely incomplete. 1, 2, 3 likely incomplete. 4 may be a back test of resistance if 3 is able to break through, and 4 may not move into 1 price territory above the invalidation point. The final target is for primary C to reach 1.618, the length of primary A. It's past equality in length with A, and so that's the next Fibonacci ratio in the sequence. Let's take a look at the structure now of primary C from its beginning here. This point here, subdividing as an impulse, intermediate 1 an impulse, intermediate 2 a double zigzag or possibly a double flat, a double combination. Intermediate 3 may be incomplete with minor 1, 2, 3, 4 and minor 5 extending as well. The target is for intermediate 3 to reach 2.618, the length of intermediate 1. A fairly common target for a third wave, particularly for this market. Intermediate 4 may find resistance at the upper edge of this channel, and then intermediate 5 may continue the downward trend toward the final target for primary C. When intermediate 4 may be over, and we know the starting point for intermediate 5, then I can also use the Fibonacci ratios between intermediate waves 1, 3, and 5 to add to the target calculation at a second degree. At that stage, the target may change, or it may widen to a small zone. Intermediate 4 may not move into intermediate 1 price territory. Draw this channel, it's important, from the end of 1 on this candlestick to the last low here on this candlestick, and then place a parallel copy up on the end of 2, this candlestick. When intermediate 3 is over, that channel, if you keep redrawing it as price moves lower, would be drawn using Elliott's first technique, and we may then expect intermediate 4 to find resistance. If we see a breach of this channel, I have an alternate chart, we'll get to that last. It's also possible that intermediate 3 could have been over at this last low, and this sideways movement could be intermediate wave 4. It could be unfolding as a barrier triangle. It could also morph into a flat correction or a double combination. It may find resistance at the upper edge of this channel, again drawn from this low to this low, a copy on this high right here. Invalidation point's the same. This wave count essentially is the same as the first, so whether or not we expect intermediate 3 is over or not, actually at this point for the main wave count in this first alternate really doesn't make much difference. Still look for bounces along the way down to probably find resistance about the upper edge of this channel. The final target remains the same. The invalidation point is exactly the same. What if though intermediate 3 and 5 are both over? How does this look? Well, if we label intermediate 3 with a quick 1 and 2 here, it actually doesn't look too bad, and this looks like a fairly typical end to a third wave. This is possible. However, we really do need to have some confidence first with a very clear breach of upward movement above the upper end of this channel, and then a new high by any amount, any time frame above this confidence point. If that happens, then I would start to take this wave count seriously. And remember, when we look at that big channel on the monthly chart, downward movement has bounced up weekly off the lower edge of the channel. There is not a lot of support from classic analysis for this view though. There are no bullish candlestick patterns, and there's not a lot of strength from this low. At this stage, the sideways movement looks much more likely to be a pause within an ongoing downward trend than it does to be a sustainable low for oil. This wave count is an unlikely alternate in the spirit of considering all possibilities. A new low by any amount at any time frame would obviously invalidate this wave count and add a little bit more confidence to one of those first two wave counts. One of the strongest downward months for oil is nearing an end, only 2 more trading days to go, and then we can have an idea of what we're seeing for March. So far, there is volume actively pushing price lower and a huge range this month. ATR is increasing. I don't have ATR in this chart though. So we know that volume is pushing price lower. We know this very, very important, which was previous support down here at 25, or just a little bit above that, has been clearly breached on a closing basis at the daily chart level. At the weekly chart level, there's a gap here. The target calculated from the gap has been met and slightly exceeded, and so we may now reasonably expect a pause within the ongoing downward trend. For the last 2 completed weekly candlesticks, volume is falling as price is falling and now moving sideways. This completed week here has a bearish upper wick, weak volume and declining range. It looks more likely to be a pause with an ongoing downward trend than a sustainable low in place back here. ADX is still increasing at the weekly chart level. It is not yet extreme. There is further room for this trend to continue, and then when oil particularly has a downward trend, it can reach extreme conditions and remain there for quite a long distance as price continues to fall. ATR increasing, there is strength in this downward trend. On balance, volume broke below an important support line. The last signal was bearish. RSI is fairly deeply oversold. It can remain extreme for quite a long time when this particular market has a strong trend. I want to see RSI reach deeply into oversold and then exhibit some good short-term bullish divergence between swing lows and price before I have some reasonable confidence that there may be a sustainable low in place. That second alternate chart does not have support from classic technical analysis, despite that nice looking trend channel on the monthly chart. Stochastics also remaining oversold. That can remain extreme for a long period of time. The moving average pattern is full bore bearish, short, below mid, below long, all of them negatively sloped, price below all 3. This is a full bore bearish look. There is weak volume at the end of the week. This looks like most likely a pause within an ongoing downward trend. There is no strength off this low. This is a weak candlestick. There's a little bit of strength here, but it's an inside day. It's not a bullish engulfing candlestick pattern or a piercing pattern. ADX at the daily chart level has reached very extreme. It is above both 45 by a fair distance and above both directional lines. It can remain extreme for quite a long period of time at the daily chart level when this particular market has a strong downward trend, so that on its own does not tell us to expect a sustainable low in place. ATR increasing as price falls, declining as price moves sideways. There is strength and downward movement. On balance, volume broke above fairly weak resistance. That's a pretty weak bullish signal. Let's look possibly for support at this slightly more technically significant support line, but still pretty weak. It doesn't really have a new range. There was very weak bullish divergence at these two lows here between price and RSI that may now be resolved by some sideways movement to slightly relieve extreme conditions, but RSI is still not into neutral territory. That's okay when this particular market has a strong trend, I keep saying, because it's true. If you look back at the price history, particularly with RSI and ADX, conditions can reach very extreme and remain there while price moves a considerable distance. Stochastics oversold. That's all from me this week with your oil analysis. I hope all of our members are remaining safe and healthy.